Today, helicopters to the rescue and closing of the stable door too late. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. And of course, New Zealand today because I have Joe Wilkes on. Hi, Joe.
Good to see you, Martin. How you doing?
I'm pretty good. And how about yourself?
Yeah, very well, very well. I hear you've been very, very busy talking to people on a one-on-one.
It's been very interesting. Yes, I've started this new service where I actually go into significant detail down at a postcode level and basically try and spell out some of the dynamics. Because, I keep saying you got to get granular. You can't just look at the sort of the macro indices and the top level because it really doesn't tell you much. So, I've had a chance to discuss with a number of people the things that they're looking at. And I guess without giving any individual, confidential information away, I can put the people into probably two buckets. The first bucket are younger people, so first-time buyers, thinking of getting into the market, confused between all of the top-level noise out there, great time to buy. Michael Sucker here saying, the government's encouraging you and helping you to get into the market. I call those bribes. Various state governments offering various initiatives too, up to $55,000 in Western Australia. So there is a huge concern amongst first-time buyers that they might be missing out. And yet, of course, if you look at the data, and particularly the projective data forward, prices are more likely to slide. In fact, we're already seeing the impact of those house land packages on offer in Western Australia. It went up 178% once those incentives, state and federal, were actually offered. And as a result, prices of existing property in and around the same area dropped, whilst home and land packages went up by, guess what, $55,000, which is the net the net contribution. So first-time buyers, very, very confused, fear of missing out on one hand, but also really worried about what happens if prices fall. And then at the other end, you've got those who are actually sitting on property at the moment and with some equity and are really worried now about what they should do because the chances are, prices will slide and that means that equity might be reduced. So should I sell now? Should I not sell? And interestingly, on Friday, Ross McEwen, who's the CEO of NAB, came out and said, look, there are people who are going to have financial pressure. And if they are in financial pressure, they should consider selling sooner rather than later because hanging on actually creates more problems than not. So, we are really seeing this bubbling up here in Australia. And I guess I'm sort of at the sharp end of it now with some of those conversations.
Yeah, well, it's quite nice. I mean, I've had quite a few conversations since our last post and just people getting in touch just to, I suppose, chew the fat and have a chat about their own individual circumstances as well. And what for me has been quite noticeable is, and like you, there is that dichotomy between the first-time buyers, great time to buy. The banks have largely removed deposit restrictions, and some of the data that came forward from the July sales talks about, basically Auckland, we've got a higher proportion of high debt to income lending. It's the highest proportion that it's been. Sales actually in July were up and the highest sales volumes around the country for the last 5 years. So that was announced on, I think it was Friday. So there is a lot of activity and there's a lot of people who, having previously been locked out by the deposit requirements, are now able to go and get in. So if jobs are safe, then that's fine. But obviously we've had that extension of the lockdown, extension of wage subsidies, which for me was quite interesting because the wage subsidies weren't just offered to Auckland households, they've been offered blanket across the whole country. So those who fit the criteria in terms of earnings being, I think it's reduced and less than 50% of what they would have been similar time last year, they're able to go and get the wage subsidy. And that's pretty much most businesses. So I think you've seen that first lockdown, people have been using reserves and cash reserves, lots of companies using that to see themselves through. This second lockdown, depending on how long it lasts, at the moment it's until the end of next week. But we will have an announcement on Friday about that. And Jacinda's apparently announcing, as we speak now, she'll be talking about whether or not we're going to have an extension to when we'll have a general election or not. So, but yeah, the whole dynamic's quite strange. And 2020 we talked about back in 2018, and it's very relevant for New Zealand and Australia as well. It's that first year where the big demographic bulge of the baby boomers, 46 through to 1970, whatever it was, that those birth years actually start getting bigger from 1955. So those turning 65 in 2020, and for the next few years, there are actually going to be more people leaving the workforce than there will be entering, and that tends to affect people's consumption. So lockdown, great excuse to go and pump more money into the system. So that the government have held back 14 billion of Reserve Bank created money for exactly the opportunity to go and pump it in. So we're going to start seeing that again. Whether it will provide the same sugar hit that it has done previously when we come out of it again, that's really for us to watch and see. But definitely the conversations that I've had with the older cohort, and this is really people sort of 63 to 65, they are quite anxious about positions. They're anxious about many of them have actually gone and geared up over the last sort of 5 or 6 years to go and get into that rental property market. Now, the rental properties were washing their face, but they're not going up at the same rate that they were before. And they've accumulated this extra debt on and against their earnings while they're still earning. So there are quite a number of people who I think will be looking at what position do they take next. And we've been tracking for a while, but we haven't actually published this data very often. I think we published it twice, but we're looking at now the stock levels and the impact that stock levels are having around the country. And there are certain pockets of the market where post-lockdown, and comparing year on year, because I can now look at what the total volume of stock for sale was, you can see that there are some markets where this has spiked. So what we've been doing is we've been tracking the total availability of properties for sale and also the total availability of properties for rent. Now, some markets appear quite stable, and there doesn't seem to be a lot of change from the year-on-year data. What happens when the wage subsidy comes off? I think that these charts could get quite interesting over the next few months. But if you look over it, so we've broken Auckland into three sections. You've got the Auckland residential market. You've also got the what I call the Auckland CBD market, which is the central hub where a lot of the high-rise apartments are. A lot of those have been previously rented by holidaymakers coming in on Airbnb rentals, and also from the foreign student rental market. So they want to be in the centre where the action is, and they've been renting these properties. Now, if you look at the Auckland CBD chart, you can see that post-lockdown, now we didn't track the data during lockdown because I just thought, well, there's no point. Nobody's going to be listing because you can't photograph a house and put it on. But as soon as we came out of lockdown, there was a massive spike in the total number of properties for rent. Now, that spike carried on going up. It has subsided a little bit over the last month or so, but it's still well above where it was this time last year. The total properties available for sale, largely flat. So people are looking to rent. Some of these are obviously being rented out. But if the availability is higher, you can see that as a result, the prices are likely to be under pressure. And with some of the CBD auction results have seen massive discounts on people offloading apartments over the last 2 months. If you look at the total Auckland residential market, you can actually see that there isn't a massive change. So the stock level for rent slightly higher. So this includes the whole area. And the properties for sale largely actually trending slightly lower than they were last year. Now, what we don't know yet is how many houses are going to come onto the market as we hit spring. So September, October, November are typically a very, very busy period as people try and move before Christmas. Now, there has been a lot of sort of holding back. We've been in the winter, we've had lockdown, and then we've gone straight into winter. But July listing numbers across the country were actually very high relative to where they have been over the last 5 years, and actually highest listing numbers for 5 years across the country. So good sales, but also very high listing numbers. Now, if you look at some of the other markets, Dunedin, which is, I probably call it it's a bit like your Hobart. It's where everybody went for yield at the end of the cycle. And there you can see they've had a spike up in the availability of properties for rent. Now, at the moment, the sales volume, so their prices have been under pressure. So property prices have fallen despite the fact that stock levels aren't that much higher than they were this time last year. Going into Christchurch, you can see largely flat, so there hasn't been a massive impact. The stock levels, unlike other areas where the rental properties and the sale properties jumped up straight after lockdown, here it's not happened, so fairly steady market in terms of availability. Hamilton, where there is also where there's actually quite a lot of development going, quite a lot of the house and land packages that you talked about for Western Australia, a lot of that going on. But again, still fairly flat compared to last year. So I think there's only a couple of pockets where one, Dunedin, you'd say there's been a spike in availability for property for rent, and also the Auckland central CBD market. Wellington, largely cushioned, a lot of government sector work. 50% of the economy is government-based employment. There hasn't been that massive spike in either availability of property for sale or for rent. So we'll keep an eye on this now, because I think we've now got a year's data, so we can actually track back and look at it relative to last year. Whereas before, it's always difficult to go and compare July with July, because we didn't have the data of, March this year to March previously. We didn't have that data when we started tracking it in July last year. So we'll keep an eye on that and see what happens. But I think that the next 2 months are going to be quite telling in terms of what we see with respect to the availability of property.
Very interesting. And one of the things I've noticed is that the yields are actually coming down in quite a lot of places here. So in other words, those people who actually have rental properties at the moment are quite often seeing those gross yields, in other words, how much rent they're getting, dropping. And when I did this analysis for a number of different people, it was quite consistent actually. Units slightly higher yield than houses, because of course houses are more expensive to start with, but the drops actually were pretty significant on both sides. And so in some cases we're seeing gross yields in and around Sydney 3% or below. Yeah. And then if you overlay the costs of running the property and the strata fees if it's a high rise, and the maintenance costs and all the other things if it's a low rise, a lot of people are actually line ball or below in terms of net yield, right? So in other words, without capital appreciation, property investment doesn't make any sense at all. And then if you look at property prices, well, in many cases they've actually started to slide again now. And so there are a huge number of property investors with rented property that they own asking quite serious questions now about what should I do about this property that I've got as an investment property. And in fact, looking at my surveys, I'm now seeing more and more property investors saying this is the end of the cycle in their minds, and therefore the question now is not if but when should I put it on the market, should I try and get shot of it, because the economics around investment property, which always was magic money tree because prices always go up, is now looking very suspect. This is a huge shift in the marketplace.
Yeah, well, we've just hit a record national median selling price last month. So there is still that perception that capital gains will always happen. And I think there are probably quite a lot of investors who they are being cushioned because of the cuts in the various funding rates. So a lot of people who were borrowing money at high 3% and early 4% are now refinancing in the lower 3s. The talk about a negative official cash rate, I can't see that. I can't see funding being over 2% by the end of the year. I think that we're going to see a lot of mortgages are less than 2%. But the wage subsidy, there's still there's still 1 million people on a wage subsidy, and that's something that we don't know yet whether that's going to have an impact on how much tenants can actually afford to go and pay. Some markets, as you can see from the charts, the rental availability is quite low, and it hasn't shifted massively, but there are definitely pockets around the country where the availability of rental properties is actually quite high. And it's those areas where if people have bought something, refinanced the house in Auckland, gone and bought a holiday Airbnb down in Queenstown, where the rent's been smashed because you're not Airbnb-ing it anymore, that's where eventually I think we'll see the pressure. So I think we're in a holding phase at the moment where a lot of people are just trying to muddle on through, probably dipping into cash reserves to top up rents. Prices on the headline seem to be great. Everything's going up again, but it's that moment that people say, okay, well, it is going up, but I'm having to fund this out of cash flow, that's when I think we'll see something change. Will it happen this side of Christmas? I don't know. I think that we are doing everything that we can to keep the liquidity in the system going and to create the new money that the economy needs to function. But how long can we postpone it?
That's always a question, isn't it? I mean, I was watching the Adrian Orr conversation because it came back up on YouTube. It disappeared and then came back, right? And they've also done another one now trying to decode what they actually were meaning to say. I suspect that perhaps people misinterpreted what they said the first time round. But it looks to me as though they are really committed to throwing more liquidity in over the medium term to try and just keep this money machine running, right? Which means that you could well see this continuing to bubble along for quite a few months. And I guess the question then is, well, if in fact they do get the virus back under control and elimination is back on track again and all those things, then it may be okay. But the question I've got is all this helicopter money that we've been talking about, right? They can't go on doing that forever. They're going to have to move the economy back to a more normal state of affairs at some point. The question is when and how, and what does that cliff do?
Yeah, well, we're at a position, I think, in New Zealand and most of the Western world where the central banks just cannot raise rates now. The attempt by the Fed to do it 2 or 3 years ago, and we were talking about the Fed rate going up, and it got up to close to 3, and then the economy started falling apart. I don't think we're at a position that we will see rates go up again. I just don't know what the solution is.
No, well, that's in a way the point, right? I think we've got a one-way street to ever lower rates. Which, of course, is why the conversation about negative interest rates, and by the way, negative interest rates could mean the rate charged between the central bank and banks for the money they hold. It doesn't necessarily mean it'll translate through into retail negative rates. It just puts an extra incentive on the banks to lend more, right? Which means that they'll probably lose their lending standards even more. But yeah, the question is this a one-way street to a cul-de-sac that we can't get out of, right? And if it is, well, that is very serious, because essentially what it basically means is that the fundamental assumptions around monetary policy and the fundamental assumptions about the way that the economy is actually controlled through monetary policy has just stopped working. Now, if that is the case, then we're in a whole new ball game, because essentially the central banks around the world, other than just throwing more liquidity, have no other tools available. And that is actually a very concerning situation. I guess it also raises the question about the interrelationship between the central bank and politics, and to what extent decisions are being taken on a political dimension rather than a purely economic dimension. Because, here we've got an election in probably 18 months, maybe less. So my theory is that here they will do everything they can to try and actually keep house prices as high as they can. Last time around, our Prime Minister said that he would ensure that prices wouldn't fall. That was an election promise, believe it or not. So it might be time to check that once again. But the question is, if you really do believe that this is a politically driven set of decisions, right, then that is a very interesting but concerning observation about the dynamics, because basically there's no real underlying logic. It's all about politics.
Yeah, well, Governor Orr said it in very candid terms, and that speech still was never aired on the television. It was never referred to. We were all busy running around panicking about the lockdown, and Governor Orr pretty much said it last week, and that he was alluding to the fact that we can make rates as low as we like, but we can't force people to borrow. And that speech still hasn't been seen in the on the mainstream TV. It wasn't referenced in fact. The only places that you've seen it is in a couple of financial websites. Most of in fact, all of the newspapers completely overlooked that we're expanding monetary policy as much as we are, because we're running. The whole obsession was straight onto the virus. Now, don't get me wrong, the virus is newsworthy, but you can't just stop talking about other things. So we were well prepared last week for 3 days leading up to Friday, every news reporter was wearing a face mask cover when they were reporting. They're outside and they're significant distances from their colleagues, but we were being prepared for an Auckland lockdown via the press. But yeah, no, Governor Orr, basically, our monetary policy, our government policy has been import people at a faster rate than most of the Western world. We've had immigration running at about 1.9% of the population for the last 5, 6, 7 years. Provide more bodies who will then borrow money to go and keep the credit momentum going and the debt burden going. Now we're not importing people anymore, so there aren't new people coming in. The rates are low, and that's I think the lower rates are actually keeping those charts and those stock levels down, because otherwise I think we'd see a lot more people under pressure. And also just the sheer number of we've got close to 15% of the mortgage book in the country has switched over to either not paying anything back at all or to just switching over to an interest only. So if you look at interest only, and my general rule of thumb was $250,000 mortgage at 5% is the same as a $700,000 mortgage on interest only. So you can service a lot more debt when you switch it over to interest only. So we've got a lot of this extend and pretend, and where is the appetite for people to borrow? It is the first time buyers. The press are doing a very good job, and what was amazing was some of the Twitter feeds and some of the news feeds on the main sites where we're all talking about coronavirus, but coronavirus hasn't had an impact on the housing market, because that's all we've got. It is all we've got as an economy, which is a shame, really.
Yeah, I think this is very concerning as well, because of course there's a similar story going on around here as well, that great time to buy, first time buyers, all these wonderful incentives, come on in. But the real story that no one's talking about is the real dire impact on small businesses. And I keep reminding people that a considerable proportion of small businesses are actually financed using a mortgage on their property. All right. And about 1/3 of small businesses here in Australia, according to my surveys, are now really under the gun. And whilst they've got the JobKeeper program, many of them haven't accessed them. So I'm thinking that one of the backdoor stories that should be being focused on is the small business sector and the knock-on effect that that's going to have on the overall sort of housing sector if some of those go wrong. And of course, a lot of small business people are in the construction sector, more than 1 million construction workers in Australia. A lot of them are small businesses, self-employed traders, as it were. And the construction sector is continuing to slide off a cliff in terms of forward work, despite all the incentive programs and everything else. Building approvals are way down. So, you look at it slightly more objectively, and you've got to say there is a lot of worry under the hood here, particularly, I think, from the SME sector, and particularly related to construction. And of course, the government's going to throw more money at the construction sector, as they always do. But the question is, what about the other SMEs? What about the other sectors where they're really struggling? And I think that, again, is not a story that's really being told here in Australia.
No, well, I've just taken on a lease of an office premise just to get myself out of the house and have somewhere to focus and go to work. And I put an offer in originally as we came out of level 2 into level 3 lockdown. Put an offer in on a premise. It had been empty for a year, and in essence, I've got my first year's rent at about 27% of what the last tenant was paying, and I have increased the rent for the second year to get the deal done, but by year 3, my rent will still be around 37% of what the previous occupants were paying, and that's a definite, because I know who the previous occupants were, because I spoke to them before I started putting my offers in. So there are things happening out there, and I think that you'll find that the first things that you can do is you can reduce staff hours, then you can go and take some cost out by letting people go. And then, if your business is running lean at 80% of sales, but actually you're down at 70%, there comes a point where you have to look at the bigger costs, and that is premises, right sizing. I think we're probably seeing quite a bit of right sizing happening around the commercial sector. There's a guy who I know runs a travel business, up near Wellington. He's got 3 shops and he's just downsized to 1. So one premise will do the job. He's kept all his staff, but they're all moved into one space now. Well, at the moment they're able to go to work in Wellington. So it's a funny time. I think people are having to make some quite sort of keen decisions, but how quickly they make those decisions will probably determine how successful they are coming out into whatever the new normal is.
Yeah, well, when we see what the new normal is, we'll talk about it, because I have no idea at the moment, Joe. As always, very interesting to catch up with you and getting the latest from New Zealand. We'll talk again soon, and keep safe, and I hope everything goes well over the next few weeks, and it'll be interesting to see whether that election is postponed or not. My suspicion is it could well be.
I think it might be. Take care, mate.
See ya.